So this is ACC Amit Kumar, and I'll be discussing classification of assets. I'll be covering the asset standards and will be relating how the decision is taken by management and which triggers the accounting for it. So I'm purposely writing the topic classification of assets under IFRS, and I'll be covering the topics IAS 16 property, plant and equipment, IAS 38 intangible assets, IAS 40 investment property, IFRS 5 non-current assets, L4C. We'll show the relationship of IAS 2 inventories with them, how inventories are related to it. For leases, the standard is IFRS 16 for dealing with your right of use assets. For financial instruments or financial assets, for dealing with financial assets, it is covered in the standard financial instruments. Any other asset which comes to your mind?
We'll be covering cash and cash equivalent, like as a part of cash flow statement.
Cash and cash equivalent. So that is part of your cash flow statement. So that is not an asset which we need to calculate anything. It is a position. Okay. We are not calculating anything in it. It is simply a position that this is what exists in the bank or in cash. Got it? Anything else? IAS 23 borrowing costs. Other assets are covered by the standard on IAS 28, investment in associates or joint ventures. The investments below 20% are covered in financial instruments. The investments above 20 to 50 are covered in IAS 28 investment in associates or joint ventures. Whatever investment we make, that is normally forming part of our financial instruments, whatever investments we make in the form of financial assets. But for consolidation purpose, we have different standards that we'll be discussing later. But as far as assets are concerned, I think I have included all the asset standards. I'm asking you if you believe I've not covered any asset which comes on the balance sheet side, and I've not covered it as yet.
Amit, does it cover that agricultural land as well, the property?
IAS 41 agriculture. Yes, it does cover. So this is biological assets and agricultural produce at the point of harvest. But there's one more term, that is bearer plants. Bearer plants are forming part of IAS 16 PPE. I'll be talking about them. The reason for asking is that I wish to build up the relationship between them, that how and what triggers the measurement and recognition of an asset. So if there is a property, plant and equipment, which the management plans to consume into the business. If it plans to consume into the business, it will also result in spreading the cost over all the years which benefit from it. So charging, depreciation and spreading the cost over all the years which benefit from consumption of this asset. Same goes for IAS 38. They are intangible assets which the business plans to consume into the business and which may be used into the business. So when a business consumes means what? That the cost of the asset which the business is going to consume, whether it is land and building, whether it is plant and machinery, whatever cost has been spent on this, the business is going to consume it through use. And if the business is going to consume it through use, we need to spread this cost over all the years which benefit and charge that cost against the revenue which we have earned by using this asset. When we use this asset, we produce goods, we provide services. Those services help in generating revenue. Against this revenue, there should be a cost which we have incurred in the form of consumption of this asset, and it should be recorded in the P&L account in the form of depreciation or amortization. So when we can plan to consume this asset, this is also known as owner occupied property. Owner means, owner in this case is the entity. There's always a confusion in the business that we individuals or we as persons believe that only a person can be an owner. Here it is a single economic entity concept, and the entity is the owner. And if the entity is the owner, If it is an owner-occupied property, they plan to consume into the business. IS 16, if it is a tangible asset, IS 16 becomes applicable. If it is an intangible asset, IS 38 becomes applicable. If we plan to consume any tangible or intangible assets into the business, we use IS 16 or 38. IS 40, this is specially for land and buildings. This standard is specially for land and buildings only. The standard is for dealing with land and building, because if we bought any land and building and we are holding it held for capital appreciation or for renting it out to others. If this investment property is held for capital appreciation of renting it out to others, in the absence of IS 40, where we would have shown it? In the absence of IS 40, where we would have shown it? We would have shown it as part of IS 16 property, plant and equipment. But by showing it under investment property head, it gives a clear indication to the shareholders that all the assets we are holding, we are not consuming them into the business. There are assets which are investments and which are going to give us rental income and also give us capital appreciation in future. So this is held for capital appreciation or for renting it out to others. So there are different models according to which we'll be following this accounting. Now IS 16 has two models. One is cost model and one is revaluation model. There is a choice in IS 16. IS 38 is similar to it, but the only difference is one is dealing with tangible assets and one is dealing with intangible assets. The model remains the same. But in case of investment property, when you are saying that you're going to use it, you're not going to use it, you're holding it for capital appreciation or giving it on rent. Now this rental income is not your primary business. If you are a dealer in land and building, and if your primary business is to earn rentals, then this rental income will not form part of investment property. This rental income will form part of IS 16 property, plant and equipment. If you're running a hotel and you're providing services through that hotel building will be forming part of IS 16 because you're consuming that hotel building into the business. But if your business is a hotel and you have some investment property which you have simply rented it out, some house you are owning, this entity is owning some house which is given on rent, then it can be considered as part of your investment properties because your primary business is something different. Your primary business is of owning a fleet of cars giving on rentals, but you're holding some land and building. This land and building will form part of your investment property. This land and building will not form part of your PPE because your primary business is owning a fleet of cars which give you rental income by running them on roads. There's confusion sometimes that whether machinery can be forming part of investment property. No, this standard is only for land and building held for capital appreciation and renting it out to others. So this is a significant component. Land and building is a significant value component in the balance sheet. If we give a clear indication to the shareholders that this investment we are not going to consume, this investment we are holding for capital appreciation, we do not intend to sell it in the near future, they feel secured about this investment. It gives a fairer presentation. There are two models into it. Two models are cost model and fair value model. In India, in IndAS 40, we have only one model. Can you guess which is the model? Can you guess which is the model applicable in India? IS 40 has two models, cost model and fair value model. We have only cost model. So if you would have been studying directly in IS 40, you would never get to know that there was a choice. So IS 40 investment property says that if you're using cost model, we'll apply the principles of IS 16. What does it mean? Apply the principles of IS 16 means that whatever are the principles of IS 16 for dealing with property, plant and equipment, for charging depreciation, for component accounting, or whatever the method you're using for showing the pattern of consumption, of recording it at cost or any other value, if you're using cost model, the cost model of IS 16 property, plant and equipment and the cost model of IS 40 investment property is same, because we do not need to rewrite the cost model for IS 40. We'll simply write that apply the principles of IS 16. If you're using cost model, the job is done. When you're using fair value model, it is slightly different. Fair value model means we'll remeasure it on each balance sheet date and show the difference as gain or loss in profit and loss account. Is this clear? We'll show the difference in P&L account. That's the basic difference between cost model and fair value model. But we committed one mistake, like we forgot that if someone is using cost model, the requirement of IS 40 is that we need to disclose the fair value in the notes to accounts. And even in IndAS 40, I think we missed it. We missed that para which said that if you're using cost model, you need to disclose the fair value of the property in the notes to accounts. So in India, we, even though there is one model, but we need to disclose the fair value of the property in the notes to accounts.